Good evening, everybody. All right, as we saw today, the market moved right back up, but we're still heading down in the stochastics. I wouldn't be uh, ready to jump back in until we see that they can get these markets back up above the T-line. Now, it's going to be more concise or more definite because we had a doji in the NASDAQ bouncing right off the 20-day moving average, kind of a tweezer bottom. And if they can take this positive, that'd be more indication that this pullback is over. And the S&P 500 also came up a little bit today. So a bullish Harame would need to be a positive open tomorrow and then see if they can get back up through the T-line. So we're still kind of in an iffy stage because your stochastics are heading down and you need to have this signal confirmed before we want to start jumping back in on the real long side. Let's take a look at some of the indicators. Right now, crude oil is flattening out about as flat as it can be. Sideways in this wedge. It may be hovering here for a while. That's half the price it was 8 months ago. Let's see what some of the other ones have done. Soybeans. Soybeans did a little morning star type signal. Looks like the up and handle setup. So start watching soybeans, see if they can get it back up above the T-line. And I've been short cotton ever since it did the little shooting star back down below the T-line, with the likelihood it was coming down here to the 50-day moving average, and then see whether it's going to support there or not. Now, that's one support area. People always ask, would you use the Fibonacci numbers? I don't. But I will put the Fibonacci numbers on there that if it didn't support right here, which is a 50% retracement, that means the next target is right here. So it'll be important to see how cotton opens up, because we're basically right here at the 50, and we're right here at the 50% retracement. So I don't, again, I don't use the Fibonacci numbers, but I look to see where they are to see if there's some buying at this level. That tells me the people that play the Fibonacci numbers are starting to buy at that level. And I'll be able to see whether they're buying or not just based on what type of signal we have at that level. That was cotton. Coffee. It's still having a hard time getting back up above the T-line. But as you can see, stochastics are starting to come up. You've had a bullish Harame. Another bullish signal. It closed right on the T-line on Friday. Took it down today, but brought it back up. It'll be important to see what they do with it tomorrow. Let's see. I thought tonight you were teaching the training for the software that you sold me. No, Oliver, I think that was... Wasn't that the other night? What night was that? I thought that was Thursday night. No, I don't think that was tonight, was it? Yeah, I'm pretty sure that was last week. Yeah, this is just regular Monday nights. Did everybody get that? Anyways, it was recorded. Okay. It was recorded last week. So if you need that recording, I don't know how to get it, so email Abraham@candlestickforum.com. Recording's not available yet. All right. All right, that could be. Okay. Well, I'll find out from Abraham where it is and how to get it to everybody. Yeah, there's 4 more training sessions. I think this Saturday we're going to do a 2-hour training on day trading patterns. That's this Saturday from 10 to 12. First one was tonight. Huh. I'm looking to see. I'll find out to make sure. Right on the website. All right. I'll have to check because usually Monday night sessions included in the deal to let you to sit on the members' webinars. Okay. Yeah, this is just a members webinar. The trainings, I'll find out when the trainings are. Oh, coffee? That I don't know. Okay, so let's say coffee. I'm looking for coffee to have a little rebound, at least maybe up to this level, or testing the 50-day moving average. That's based on a positive open and trading up through the T line. If it opens lower, we pretty much know that we have a JPEG pattern. Okay. Yeah, I thought our first one was on day trading on Saturday. It's March 9th. Ooh. Here the empty for your 4 free days of access. All right. Well, since I'm only prepared to do our regular session, here we go. All right. Yes, here we go. That's coffee. What else do we usually look at? Gold. Gold is still in a downdraft. Notice today that this is what we call a homing pigeon. A homing pigeon is a bullish harami, but with the colors of the candle the same. A little bit weaker than a bullish harami. But if it starts trading positive, that means they're going to bounce it in here. Oh, the meats. Live cattle in a very, very, very slow uptrend. Just having a hard time getting out of this area. But as you can see, it is in an uptrend. It's above the 3T line as well as the T line. You can still be buying cattle on a positive open tomorrow. That pretty much tells you they supported at the 50. Hogs. Hogs is having a hard time getting moving one way or the other. Right now, we're not anywhere near hogs, just there's no trend to it. Now, if it came back down to this level, that tells me this downtrend, bearish J-hook pattern should be in progress. Let's see, the 10-year notes, still down, but bullish harami today. Doesn't tell us a change of direction yet, but it might tell us there's going to be a bounce in here. Sir, yeah, we used to have a pig that we call Inky because he would always get out of the pen. What is the outlook on gold? Let's take a don't know. We've come back to the support level, but as long as it's still below the T line, you might be in a bearish J-hook pattern. If I was going to short gold, I'd use this spot right here, that if it came down through there, they aren't holding the support level anymore. Now we've got wave 1, wave 2 going into wave 3. We go into wave 3, which went from 131 to 120, 11 bucks, 110 bucks. Means they'd take it down to this area, which I guess would be about about the $105 range. Or I'm sorry, 1,050 range. So silver. Silver also is rolling over. That's also right here on the support level. If it opens lower, that means wave 3 is in progress. The dollar coming out of this slow curve, still moving higher, which means the euro. Oops, that's not what we want. UAH5. Doing this dumpling top, I'd be ready to short the euro on any weakness from here because that would put you on a doji sandwich, breaking you down even further. Okay, let's see. Gold, silver, dollar. There's a big one of missed. Wheat. Wheat's kind of just hovering in here in a slow down trend, not anything. You use GLD, that's for things like different services have different codes, and this is I'm using CQG right now, and so they've got audio is choppy. That's me just humming and hawing, Terry. Natural gas still stuck below the T line and the 50, but you just failed at the 50. Did a kicker type signal to the downside. That would suggest to me that they're coming still down to the bottom of the trend channel. We did crude oil. Crude oil is just kind of trading sideways. Nothing here that would make me want to be long or short. Just kind of a wedge setup at this point. Okay, let's take a look at some of the stocks that we're participating in and why. ADXS, which was a buy recommendation when it came out of this, broke out of this downtrending channel. Notice what it's done over the last couple of days. Remember, the market on Friday got killed, and it's still moving up. So there's still something going on ADXS that you want to stay long on. Same scenario with CEMP. Nice steady eddy. Let me make this a little bit smaller. We've got a wave 1, wave 2. Notice how you came out of wave 3. This little slow curve breakout. Very simple. You just stay long on this as long as it stays above the T-line. Now, the reason I'm showing this is because if you can start catching these type of moves, if you do the simple, what I call a simple, eliminating the emotions out of your trading portfolio management, which would be that you have a set number, like 10 positions on, that if you can start, every time, there's going to be a lot of times where you get in and out of positions when they don't work, but when the ones that start working, if you've all of a sudden got 8 positions in your portfolio that are working, you're only having to pay attention to 1 or 2. The others, you just kind of hang on to as long as it stays in the steady eddy type trends. Same scenario on the breakout of SRNE. Did I say that? SRNE? Just a nice steady eddy as long as it stays above the T-line. Same scenario with, we've still got some positions on Serve. Ever since it came out of the fry pan bottom, it has no headaches as far as what to do with it until we see a sell signal and a close below the T-line. And SWKS, is one of our option positions where it's in a steady eddy. So if you can get into positions like this, and you have 4, 5, 6, 7, 8 of these, this is the reason why some of the positions that you get in, you have to get back out. Get in, get back out. But when they start moving, all of a sudden you're going to have a few positions working. Joseph, wave 1, wave 2, wave 3 is just very simple. Wave 1, wave 2, wave 3. If this hits a sell signal and starts pulling back, now this becomes wave 1, wave 2, wave 3. The reason I only count 3 waves is, being a swing trader, I'm not going to be in a trade very long. I just want to be in the trend that I'm in right now until it ends. Very simple on a steady eddy. What's a steady eddy telling us? That you're above the T line. So what don't you want to see? You don't want to see a sell signal and a close back below the T line, like Netflix, which was in a kind of a 45 degree. Or the same scenario with Amazon. After it gapped up, it was in a 45 degree. Then we had kind of that little evening star signal and a close below the T line. That was different than anything else in this trend. Anything else in this trend was not a close below the T line until Friday. You monitor that stop or place it every day as things move up. I move it up every single day. Each day I do the same factor. I don't want to see it close below the T line. Don't want to see it close below the T line. I don't want to see it close below the T line. So just move it up each day. Okay. Now WLL, again, for our longer term holds, as we can see, this is kind of hit that bottom. Let me make this chart real small. All right, as we can see, I'm going to make this a little bit bigger. This stock had come from 100 all the way down to 20. So was it ever going to go back up? Well, when we started seeing these signals, and then notice our little left-right combo, notice what it did here when it backed off. It was higher than here. Prior to that, all the highs were lower highs and lower lows until we hit the bottom area. Now we're hitting higher highs and higher lows, which means we should be looking at this. Now, also, let me make this bigger, and I'll get back to don't worry if what have I done? I just don't know what I've done. It's bigger. So now we're seeing a lower lows, or higher lows, and higher highs, higher lows. Now we've seen that gap up and a doji. Which tells us very simply, if they open this higher tomorrow, you want to be buying because it's going to move in the direction how they open it after a doji, after they've had a doji gap up. That tells us there's a lot of force in there. Where's our next target? Next target is filling this gap, which from 37.50 to 52 is a good percentage move, and then the possibility of moving all the way back up to the 200-day moving average. Do you monitor that stop and place it? Yes, every day. I've had some issues with corn bouncing around either side of the T-line on the 10-minute chart. Could you, because the daily is in a wedge? Yes. This is exactly why you want to be able to identify what type of pattern you're in. This is corn. So if you were looking at the corn chart, which way is this moving? Pretty much sideways. And what's it doing here at the T-line? It's up above the T-line, below the T-line, up, below, up and below. If that's doing that at the T-line, what's it basically telling you? That you're not going anywhere. So this becomes a chart that you don't want to trade. You're looking for charts where you can see that it's above the T-line or below the T-line, and you've got a trend. Just because you like, I'm saying, speaking for myself, when I used to like to trade something and it went like this, I said, man, I can't make money with this. It's not doing anything. And then I finally stepped back and said, yeah, it's not doing anything. Don't be trading this. Move out. So, yeah, so that's exactly why you're not getting anything on your 10-minute chart, because there's really no direction right now. Is your stop based on the close? Yes. Remember, the important factor about candlesticks is the open and the close. Those are your two final decisions. One's not final. So your opening decision and your closing decision. That's why we have the candles. Open and close. That's the important factor. Those are the final decisions. The close is your final decision for that day. I'm trying to think of one. And not what I wanted to illustrate, but you can see that they've traded some of this down, but closed above the T line. Traded it down, closed above the T line. Traded it down, closed above the T line. So the close is your important factor. MP, I don't know how high you're referring to. Do you put a hard stop in or just a mental stop? Depends on where I am, Elsie. If I'm sitting here watching something, and I'm trying to think of... If I'm sitting here, I got two reasons to place a stop, or two factors for placing a stop. Right now, I'm short cotton. So I know on a daily chart that it has to be trading down or staying below the T-line to stay with it. But I also have my 10-minute charts up most of the day, and there are times where it comes back up above the T-line. I have to decide, all right, do I close it out here? And I did this once today. I don't remember what it was, and it may have been here, where I closed out my short position. Now, I've had this short position on for a while, and I've probably closed them out a couple times, but that's when I'm in a situation where during the day it looks like they could be forming a bullish signal. I'm closing out the position. But when in the next 10-minute sector, it comes back down through here, what's that telling me? It tells me they didn't confirm above the T-line. I want to reshort it. So I did that once today where I took profits, and I'm trying to think of where I took. No, it was down here. No, it wasn't even there. It was right here. Notice how they were starting to bottom in the oversold area, and it was starting to trade back up. So I had like a morning star signal. So I took profits. I mean, I've got some very good profits in it. But then I just reset my stop right here. But if they came back down through this level, and I don't know whether I did it where I was watching the 5-minute chart or not. Probably right in this area. But for the time that I could spend watching it, right in here, where it started looking like it was coming up, I just closed it out, took my profits, and then put a stop right here that if it came back down through that level, I wanted to be short again, which I did. Now, fortunately, I was gone. No, wasn't gone. I covered this again when it did a bullish engulfing signal in the oversold area. And it was trading up here when I was going out the door, and I put a stop somewhere right back below the T-line. So I'm still short cotton, but I was in and out of it a couple times today at places that told me, all right, they're starting to show some buying. If they're buying right here, I want to be out of it, but I can always reshort it. What are the extent of the tips of the wicks telling you over the bodies of? Yes. Well, the wicks are where it's trading during the day. So when I saw it trading up on the 10-minute chart, and I saw that they couldn't get below this level 3 times on a 10-minute chart, that means they might be supporting there. So I covered. But the length of the wicks, for example, like this wick right here, where's another one? This is on a daily chart. Notice this wick right here. Failing at the 50-day moving average area, doing a shooting star. Then it gapped down the next day. So the magnitude of that wick, or that tail, had a couple messages. First, it reversed severely. Secondly, it reversed right there around the 50-day moving average. So the length of or the magnitude of the wick is important visually to tell you there's been a reversal and created some sort of signal. I purchased the Campbell package last week, having problems with the installation on TOS, even numerous. Elvis, I thought, yeah, I mentioned that to Abe. He said he was going to get back to you. I thought he said he talked with you this morning. He talked with Elvis this morning. Did not you? Okay. I'll make sure he'll get to you. And I don't know whether he was supposed to be helping you or whether the guys there that wrote the programs all this time. So anyways, he's apparently aware because we saw your emails. All right, where am I? All right, let's see. So, again, getting into the steady eddies has a very important criteria. You don't want to see it close below the T-line. And what else do we have? NC is another one that's staying above the T-line, a nice steady eddy. We had a day where it closed right here. And notice where it opened the next day. It opened positive. Came all the way down and closed almost back up above the T-line. But that big tail right there, the big wick, told us, all right, the bulls are stepping back in again once it got below the T-line. Let's give it another day. The next day they took it up, and the last couple of days they haven't been able to get it back below the T-line. So is your... Yep. And we did Kohl's. Kohl's, I closed out my options on Kohl's on this left-right combo because what did that tell me? It told me for at least the next day it probably is going to come back down to the T-line. And did I want to hold on to some calls when the market looked like it was getting soggy and it might come back to the T-line? No. Now, if it does a J-hook pattern, I can always reestablish whatever positions I had in the options or maybe go out to the next month. The T-line is your 8 exponential moving average. I think Hubert, so I think Abe is sending some of the over, the 800 number, Thomas. Or I guess it's Hubert's number, right? Didn't Hubert leave a number a bunch of times? Anyways, Thomas, if you email me, we'll get you the numbers. So you bailed out of cotton on 10-minute on the bullish around the close, but before the price crossed the T-line to protect your capital. So sometimes it's not to wait to close. Well, when I did this, it was on the basis that I was seeing a support level. Let's see, on the 10-minute chart, I was seeing this support level setting up. And again, I've already got some huge profits in it. And it was trading up here, so I closed out the position because I don't have, okay, thanks, Trade It. I don't have the opportunity to sit and watch every tick or every trade, so I just put my stop back here that if they came back down through that level, that means that support level is broken. They're still in a downtrend. And then near the end of the day, I re-shorted on a stop, and it came back down through the T-line on the premise that the daily chart is looking like this. We're still on a downtrend. It was creating a bullish signal, a Morningstar signal. When entering in positions, you buy/sell options at the money, and how far out? Todd, we go into when we do one of our option training sessions, which hopefully will be fairly soon. We go into the math. What makes the most sense as far as the math? If it's a slow, steady mover, I might be buying at the money. If it's something that has big upside potential, I might buy out of the money, because the big upside potential obviously creates the opportunity for big downside potential also. So that's all a function of, and then right now, for example, I didn't get this one placed today, but I'm looking at this as a option trade, and we're less than 2 weeks away from expiration. I'm more apt to go after this one based on a spread versus just buying the calls, because the percentage might be a whole lot better and the risk factor much better buying a spread than just buying calls outright. So anyways, that's a whole different topic of which options to get into. What is the purpose of having the 3T line in your charts? The further away you move from the T line, the more effective the 3T line comes into play. DP, I don't know what the problem is there. I'm usually yelling pretty loud. How do you know the big potential? Based on what type of pattern is coming, or what type of pattern is coming out of? For example, if we see something like right here starting to move up, at least we know we're probably in a fry pan bottom, steady kind of movement. Or looking at something like SWKS that has been a steady eddy, and it looked like it was coming back up, doing another steady eddy, I might just buy in the money calls. But something like WLL that's had a gap up that could get a good explosive move out of here because of the doji gap up, that might be something where I might, in this case, I might do a call spread, but it might be a way out of the money call spread versus near the money. But that, again, it's all based on the math. I tell people it's not the trading method that is most effective. It's the trading method that's most effective for the potential coming out of a price move that makes the most sense math-wise. All right, we got off topic here. We will do a option training session again here pretty quick. I don't know when pretty quick is. I might try to schedule one next week if we have an open night next week. Let's see. PTLA is another one that we've been holding because it came out of the fry pan bottom, and all we do is stay long on this one as long as it stays above the T line. Jason, yeah, we'll make sure everybody's aware of when it's going to be. W-Wave, another steady eddy coming out of the fry pan bottom. Just a very simple trend conclusion is you stay long until you see a sell signal and it close below the T line. I'm still putting that all together, ride the curve. I'm keep adding stuff. It'll get done as soon as we get a lot of the scanning information out of the way. NRX. Now here's something that's got more of a slow indication. There's a big fry pan bottom setting up. So at this point, if I was buying options with the expectation it would probably come back up into this area, I might be buying at the money calls. Once it gets up here and starts breaking out, I might buy more out of the money because I know that it's going to head to those directions. No problem. Yep, you just keep reminding me. Selling puts, that's another avenue. Again, it's all in the math. There's going to be times where buying a call might have too much premium in it, while selling the put, which also has too much premium in it, is much better. And that's one of the things we go through. Oh, LC, that's one of the basics. That's why you want to learn the patterns and the signals. Fry pan bottom's a big rounding bottom. Notice how you couldn't trade this one way or the other. But you can see that it's a big rounding bottom, which usually means coming out this other side, you're going to have a very strong price move. How many closed bars above, below the T-line do you wait for before entering? Usually a candlestick buy signal and a close above the T-line. Next day, if it trades positive, I'm starting to buy, as long as it stays above the T-line. So I was asked that not too long ago. Somebody was saying in one of the sessions that they used a different technique, and if it, after 3 days or 4% or whatever, they would start buying. That would confirm the reversal. And they asked how many days it took for candlesticks to confirm, and the answer to that is 0. So I'm going to skip ahead, because today we've had the setup on GIMO, which will probably be one of the recommendations for tomorrow, because we know what type of pattern this could be setting up. Because what do we have here? We have a doji that gapped up above the previous day's open. And what do we know about the doji? We know that if it opens positive, it's probably going to trade positive. And if it does trade positive, what type of signal do we have? We've got a flutter kicker. A flutter kicker is a big bullish candle after opening at or above the previous day's bearish candle. In this case, it's got the little flutter in between. So if you took the doji out of that, you basically have a strong kicker signal. And if you know it's going to move positive, what else is it telling us? It's telling us that this level is not acting as a resistance anymore, that we're in wave 3 of a J-hook pattern, wave 1, wave 2, going into wave 3. This is a J-hook, yes. This is a strong price move followed by an indecisive pullback, and then you can see when the bulls step in that if they start into wave 3, that wave 3 is going to be the same magnitude as wave 1. Oh, is that right? Yeah, I think that was true. Let me go here real quick. Yeah, very light volume. Thank you for pointing that out. But for some reason, it's on my charts, which is set up to not find anything unless it trades an average of 200,000 shares a day. I'll have to look to see why that's happening. Can you project up to the top of a channel where it should go? Yes, if you see a channel, yeah, at least knowing that at the top of this channel, that's where your first target would be. What would be the entry in GIMO? A positive open. We just said, what do we know about a doji? That if it opens positive, the probabilities are pretty strong. It's going to trade positive. That's the doji rule. If you buy a signal closes above the T-line, is any further confirmation required? Example might be an engulfing signal. If your buy signal closes above, well, let's see, if your buy signal closes above the T-line, yes, you want to see that it trades positive. Well, it didn't for the next 2 days, but then started trading positive. By that time, you could see that it was staying above the T-line. Does anybody understand what top of the channel means? Yeah, the top of the channel is, if you can see where there's a bottom of a channel and a top of a channel, it usually moves in the channel. Let's see if I enter at the market. Now, I may see it open. I might wait a few minutes because there's when we do our entry strategy session, there's 4 quadrants. There's the market opens positive and your stock opens positive. That's buying immediately. The stock opens positive and the stock market opens weaker. You wait to see what happens after that. The market opens stronger and your stock opens weaker. You can buy when it comes back up through the previous day's close. And the market opens weaker and your stock opens weaker. You don't need to do anything until you see things turn around. So if, let's say we woke up tomorrow and the pre-market futures were showing that the Dow was going to be up 40 points on the open, and this looked like it was opening positive, I'd be buying probably within the first minute or two with a market order. Because I want to be buying. I don't care whether I'm paying, let's see, I don't care whether I'm paying $21.81 or $21.96, because I'm not buying it for a few pennies. I'm buying it on the basis that the next move on this one should be another 5 points. Sometimes it's a head fake, yes, but you're playing the percentages, the probabilities that if anything opens positive after a doji, it's usually going to move positive. So what's the ideal volume? I just have my scan set that I want to see that they trade more than 200,000 shares a day. First 30 minutes or first hour for being positive? Oh, probably the first minute. If the market opened positive and this stock opened positive tomorrow, I'll probably be buying it in the first minute or two. Okay, what else we got here? ISIS. ISIS is a good example of it traded back down below the T-line today. It looked weak, but you wait till the close to see if it's closing back up above the T-line. All right, some other ones are looking good. GIMO was one. Oh, boy. Is this CYTX? Looks like a J-hook pattern setting up in this one. That's not the one I'm looking for, though. CYTR? No. Ugh, who wrote that? CYT, maybe. CYT. There's your wave one. There's your pullback. There's your doji followed by a bullish confirmation. Stochastic's turning back up. If this opens positive tomorrow, what is it telling us? It's telling us that they're confirming this reversal signal, that it's staying above the T-line, and what everybody else can see, it's breaking this downtrending channel. That tells me wave 3 would probably be in progress. Wave 3 is going to be the same magnitude as this, approximately 10 more points to the upside. Is this EPAM? EPAM, same scenario. Notice the pullback on this. This move was pretty strong. The up moves are pretty strong. The pullbacks are relatively indecisive. And where did it turn around? Right smack dab on the T-line. Can you see the trend channel? You can draw a line right here through the bottoms, and you can draw a line right through the tops. So what's this make our next target? Coming up here somewhere. To do the top, or to test the top. So it'd be a good target to shoot for. Would you buy option calls? Would you have gotten out when it pulled back? Yes, that's the function of the T-line. When you start moving away from the T-line, the further you are from the T-line and you start seeing sell signals, the higher the probability it's going to come back and test the T-line. Save your individual ones for after Jim does the double line. Yes, so this would be my wave 1, this is my wave 2, and wave 3 should be at least the same magnitude, which would put me right up about where it should be. So you got out. Well, this is where you would have gotten out, somewhere in here, because where was it going to go back to? It was going to go back to the T-line. Was it going to hold there? Had no idea. So I don't mind getting out in here somewhere, and I don't mind buying back here, because when I'm getting out, I don't know whether it's pulling back to the T-line and then some. At least when I know when I'm buying, that the pattern is moving in the direction it should be moving. Let's see, LCI, another J-hook pattern in progress. What is our prerequisite for a J-hook? Very strong price move. Notice the pullback, and notice what it did right here on the T-line. About 5-6 days of indecisive trading. What did today tell us? Very decisive. And that's exactly what we want to see after an indecisive trading period. So if this opens positive, what's it telling us? It's telling us that this little left-right combo is confirming, telling us as they're breaking out through this level, telling us that wave 3 is now in progress. This one is LCI. All right, and WPRT, another one that is now coming back up above the T-line. You've got this kind of wedge. So if this opened positive, what would that be telling us? If this candle is confirming and this little downtrending channel is being breached, we're probably now in wave 3 on this one. How do you know when to get into a J-hook pattern? You've got two places. Hopefully I can find another J-hook pattern here pretty soon. Now, let's see, this was our slow curve breakout. That was JDST. Let's see, I'll find one here pretty soon. FWM. This is probably a J-hook pattern also. Notice that you've had a steady eddy, came back down below the T-line. You should have been out. Now you can get back in. This is probably going to be more of a steady eddy because this is where the Japanese rice traders say, let the market tell you what the market's doing. Well, the market was telling us this was kind of a slow, steady uptrend. They couldn't close it below the T-line. They've pulled back. Now they're back up above the T-line after this little consolidation. You've got two things going to do. Is it going to continue the uptrend about the same trajectory, or have a strong move right up to here and then continue the move above or at that same trajectory? How do you know? Can you go over where the waves start and end? I am a bit confused as you tend to point them out so quickly. They just end or start where you can see where there might be a bottom and where there might be a top. That to me is wave 1. That's about as sophisticated as you need to be on this. This is just wave 2. That's a pullback. Then wave 3, if this starts moving positive, will be beginning of wave 3. And again, this is not a sophisticated count. This is just trying to show where approximately or what the magnitude of a wave was. This one I would count more that this was a wave 1. Then it went sideways for wave 2. Now it's done kind of a flutter kicker, but notice it gapped up and then continued higher. This is starting wave 3, which should be about the same magnitude as this wave. What are your 4 averages? The red line is your 200, the blue line is your 50, and your gray line is the 20. Simple moving averages. And the reason for that is every major money manager in the world uses those moving averages to make decisions about their portfolio. The advantage we have is with candlesticks, we can see exactly what their decisions are at those support and resistance levels. The black line is your 8-day exponential moving average, which we call the T-line. Very simple instructions on the T-line, which is if you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line. Would you put more emphasis on the T-line than stochastics? No. The stochastics for getting in and out of a position are important, but once the trend starts, the T-line just becomes a good trend indicator. Now, notice that once you were up here, you were already up in the overbought condition of stochastics. But you didn't see a sell signal really that closed below the T-line, so at that point, that's when the T-line becomes your most important factor. Nobu asked that again when we get to the end. I'll tell Jim to do the double line. That's when you put in your requests for individual stocks. The light green line is the 3T line, the 3 exponential moving average, which becomes more effective once you start moving away from the T line. Regarding moving average and exponential moving, what is a Hall moving average? Hall moving average, I have no idea. Why do you have a 3T line? Because there are times when you get into the right pattern and you start skyrocketing on a stock, you have to figure out when you start taking profits, because the further away they move from the T line, the more likely that's when you want to have the 3T line kick into effect. Because if you start moving away from the T line and the 3T line, that's when you flip to your 10-minute chart and say, all right, let me see when they're going to start taking profits. INFN. Notice you're kind of in a 45 degree, a slow 45 degree. Now you have a slow curve with a doji sandwich breakout. If they open positive tomorrow, what's that telling us? They're confirming this slow curve breakout, and they're breaking through the top resistance level. This one you can be buying on positive trading tomorrow. And CLDN, this is why you want to use your 3T line. Notice coming out of this fry pan bottom, strong price move, gap up, and that's exactly what you want to see coming out of a fry pan bottom. Then notice what they did. They did a trend kicker signal, which meant yesterday they opened this, or this day they opened it and closed down here. The next day they gapped it up above the previous day's open and went the opposite direction. That was not a reversal. That was just telling you the trend was still going to have more upside. Now, notice where you are on this big fry pan bottom breakout. You're a good distance away from the T-line. You're also a fur piece away from the 3T line. So where would be my stop? I wouldn't want to see this trade lower. My first stop would be probably the low of today's doji, which probably tomorrow will also coincide with a 3T line. And if it came back down through there, I'd take profits, because more than likely they're coming back down to test the T-line. So this is just now getting us a little bit prepared to take more profits up here. Now, over here, would I've taken some profits? That's where you flip to your 10-minute chart. And let me see if I can find it. No, I can't find it very well. But sometimes on these gap ups or these big, strong price moves, if it's real big, then you flip to your 10-minute chart and see when it comes back through the T-line. Taking profits equals closed position. Yes, closed part of the position. It depends. If, let's say, for example, I saw this doji today. If I owned this one, I might at the end of the day take half my position off, because if I bought down here on the fry pan bottom breakout, I've already got a good 35% profit in this move. So I might take half my position off at that point. What does that do for me mentally? Well, if it continues higher, I've still got a half a position of making profits, but in a very high risk area. If it opens lower and starts trading down, I close out the other half, and I got most of the profits out of that trade. How do you distinguish a retracement from a reversal? Usually a retracement will occur without a reversal signal, and the nature of the signals will tell you that they aren't trading very decisively on the pullback, that it's an indecisive type pullback. That's why if this all of a sudden started pulling back with a doji, little hammer, little inverted hammer, all the way back to the T-line, that tells me they weren't selling it off hard. They were just consolidating, and then I watch for the next buy signal. With the blue and the purple lines crossing, what meaning does that have? Nothing. I'm not trading the moving averages. My number one criteria is the signals and the patterns, where we are in the stochastics, and where we are with the T-line. We don't know that. The question is, with CELND, how do we know it will continue to rise with another J-hook, or will it come down to the T-line? That's what we're waiting to see. If it started trading lower, and especially back through the low of the doji, that would suggest it's coming back to the T-line. If it kind of did a doji, then a doji, then a doji, that would give me more of an impression that it's setting up for a J-hook pattern. Okay, let's see. Did I do GTLS? GTLS is a good example of coming out of a fry pan bottom. Then you had your shooting star. It didn't close below the T-line until today. So yesterday told us it had to open positive and trade positive today, and this makes it very simple. If it opened positive and immediately started selling off, that's when you put your stop at the T-line, because if it came back down through there, it was also coming back down through the previous day's close right on the T-line. They were still taking it down. That's when you take your profits and get out of the position. What you needed to do to stay long in this one was that you needed to see it stay up above the T-line, meaning it needed to open positive and start trading positive. Or even if it opened lower a little bit and then immediately started trading back up, at least you would be able to see that immediately with the color of the candle that was forming. We project, not predict. Yes, okay. That's it. I didn't order the signals and patterns. I just ordered on the weekend. Elsie, if you go to www.candlestickforum.com, go up to products and services. We've got probably about 4 dozen training videos. And the bread and butter is the 12 major signals. With the doji sandwich, would you close it out at the open? With the doji sandwich. I don't understand that question, Rick. If you have options on GTLS, would you have closed them out today? Yes. Your option is nothing more than buying a stock with a well, for Shazam, what's going on here? An option is nothing more than another way to buy a stock. So a lot of people say, well, how do you trade options using all this? You trade options using all this by simply analyzing what the stock's doing. If the stock's telling you it's time to sell, that's when it's time to sell your options. That's I don't see a doji sandwich here. Here's the doji sandwich where you have a bullish day, a doji, and then a bullish candle right behind it. Notice when it opened positive, it went positive that day. Can you please show a idle doji sandwich? I don't know what an idle doji sandwich is. No, I've got more here. No, not too many more. Let's see. G-Gal. G-Gal is a J-hook pattern. There's your fry pan bottom. What do we expect coming out of a fry pan bottom? A strong price move. Then the pullback, indecisive, because it couldn't get back below the T-line, then started back up. So there's two places you can buy. You can start buying here. Your risk-reward factor is if it fizzles here, you get back out, hopefully with a flat or a slight profit. But if it fizzles right there, that's telling you you've got a double top. If it goes through, tells you you're now in wave 3. Or, more conservative, you can wait for it to break through. You know that you're in wave 3, the same magnitude. Your profit isn't as much, but your probabilities are much greater. The two lines on stochastics are they usually have, no matter what stochastics, they got a fast and a slow stochastic. Mine are slow stochastics, set at 1233. I don't use MACD because that's more of a lagging indicator, and it doesn't really help you all that much. I'd rather know, my first criteria is which signals to use, and where are they with the stochastics. Now, on the other side, we were shorting some stock. There was that shooting star failure of the 50 on STX. Now, another part of your analysis is notice where we are in this trend. I mean, we're in a downtrend. and every time it comes up to a resistance level, backs off, that tells us our downtrend is probably somewhat to the bottom of this trend channel. Again, if you kind of draw parallel lines, it doesn't have to be exact, but you can see we're in a downtrend. So where's our next target? Right down here someplace, catching this downward trend channel. Away. Notice the failure. There's your bullish or bearish harami. Notice they tried to take it back up right here at the 200. First of all, it came up and failed just below. Looked like they were doing a bobble. But what did we need to see on this bobble? There was our bullish, there's our hammer, bullish engulfing. It needed to open positive and trade positive. It closed back below this level, telling us they failed at the 200. We want to be going short. Where's our next likely target? Back down to the 50-day moving average. And Lulu, notice when they took it up and they brought it right back down below the T-line, kind of your doji sandwich with a shooting star in it, and then gap it down. What's that basically telling you? Pretty much telling you they want to be out of this with great force. You stay short on this one. I'm trying to think of the other one that, oh man, can't remember which one that they've started shorting. It was a big name. 8 we had recommended as a long a while back, but it never confirmed. And notice the trend. So we've probably got a wave 1, wave 2, going into wave 3. Now there's kind of your doji gap down through the support level. You stay short on this one. Oh, liquid lumber day. Yeah, that was it. Notice the big gap down. They're still selling this off. The bigger this signal is, the more compelling your downtrend is going to be. And Ralph Lauren had a big, there's your kicker signal to the downside. They failed coming back up through the T-line. Now you basically have a wave 1, wave 2, wave 3 should be the same magnitude, which is about 35 points. That would take you down to about the 100 level. And WRC or YRCW was the other one that we're short. Slow rounding top. There's your left-right combo back below the T-line. And notice what they did when they opened up the other day. Immediately took it right back down. This tells me that this is wave 1, wave 2. This wave to the downside should be about the same magnitude as this one right here. We recommended going short today on GEOS. Oh, mercy sakes. No wonder you were asking whether I was done. It's already after 9 o'clock. This one has a slow curve. I would be more apt to start shorting this one on any weakness tomorrow, because that tells me wave 1, wave 2, wave 3 is in progress. So I didn't realize that I'd talked this long. This is sale. This is what we call a T-line crunch. Notice how the T-line, it keeps pushing this up toward the resistance level. If they get right up here, you watch to see if they open up positive, because you know everybody and their brother is watching to see if they're going to be able to get it through the 200. So if this kind of does a T-line crunch, pushing you up through that level, if it comes up through the 200, you want to be buying immediately, because that's when everybody else will start piling in. Did you use a scanner to get these tickers? Yes, there's very simple scans. As you've seen over the last couple of weeks, we've done scans for Thinkorswim. We've done scans for TradeStation. We've already got the scans set up for Warden Brothers, TCNet, Metastock. We've got some over on Ninja, but they want us to add a lot more. And there was a couple other ones that people were asking about. I think E-Trade. So there, yeah, we've got scanning softwares. Does STX scanner today qualify as inverted hammer in the oversold condition? STX. It does, but notice, what is that? notice your stochastics are still heading down. So this makes for a very simple trade setup for tomorrow. If it opens positive, you cover your short position. If it opens lower, you short it, because now you'll have a doji sandwich with this same magnitude move as here, telling you they aren't supporting anymore at this level. You're going lower into wave 3. Would you buy when there are very strong candlestick signals, but the stochastics are not in the oversold area? Yes. Again, the stochastics are only, the number one criteria is what is the signal you're looking at. The second criteria is where are you in your stochastics. Now, would I buy a bullish signal if the stochastics were already up in the overbought area? No. Not that it's not going to go higher, but it's probably a high-risk trade. I can probably find a bunch of positions like this where the stochastics are in the oversold area and I'm seeing bullish signals, then my probabilities are much better to be buying that one. All right. I guess that's about all I have. Oh, let's see. OPK was one that we've been long, but it's now told us it's failing, that we should have definitely been out either Friday or today, which means if this opens lower, where do we think our next move is going to be? Probably back down here to the 50-day moving average. All right. Are there any general questions on candlesticks that I can answer? Would you consider a doji on Apple today? How big can the center part of the doji be to still be considered a doji? If you've got a that's a spinning top, and a spinning top is basically the same as a doji, where you got much bigger tails to the upside and downside, and so it's a doji and a spinning top. The spinning top just has a body to it versus a doji that has no body to it. Yeah, with this long-legged spinning top, with still indecision between the bulls and the bears, makes it very simple. If they open it lower tomorrow, they're taking it lower. If they open it higher and start taking it up, they're going to take it up from here. For the above question, having some difficulty with stops, when you take them intraday versus waiting until the end of the day to determine if a stock is taken, example, PTRX, PRTX. PRTX. I'm not coming. There's a PTRX. That might be a lap. No. PRTX. PETX. It is a lap. Your stop. You had a shooting star on Friday, and it opened positive today. Your stochastics are in the overbought area. If it opened positive, where should it not come back after a sell signal? Back below today's open. So if I saw it open up here, I would have had my stop at today's or Friday's close, because if it came back down through there, that's telling me the shooting star is now being confirmed. And ZIOP, again, this one could have easily been one where it opened here and started trading down. Your stop should have been at the previous day's close, because notice what your trend's been so far. They took it all the way down below the T-line. But at some point during the day, when they started bringing it back up here above the T-line, you can always buy back. Because if they're heading up and you're buying back where at the previous day's low where you sold it, it basically tells you on probably your short-term charts at that time that you can look at your 10-minute chart. What did it do on a 10-minute chart? It broke out of this wedge formation and came right back up again. And so you know what to do there. So if you can see on your 10-minute chart that it's broken out and they're taking it back up, that would pretty much extrapolate to the fact that they're taking it back up above the T-line. And what's our criteria? We want to see a candlestick sell signal to close below the T-line, or they're going to take it down to the T-line. You can always buy it when it starts coming back up. How often do we have these sessions? Jay, we have these every Monday night, and then Thursday nights are open for everybody. They're so we have Monday night sessions and Thursday night sessions, and then for members, we try to at least once a week have a session on entry and exit strategies, stop loss strategies. For some of the option people, we do where you buy calls or where you buy call spreads. The scanning techniques, the general scanning techniques, so that you can apply them to whatever scanning software that you're using. Okay. All right. All right. What we do now is I tell Jim to do the double line, and then you type in your try to keep them limited to 2 questions. So Jim, go ahead and do your double line. Okay. And so if you've already put in request above that, you have to type them back in again. And then Jim, in 4.8 seconds, do another double line. Okay. St. Joe's. This one really doesn't have a reversal signal, so I'd be less apt to play it. But if it did trade up above or broke out through this level, meaning if it opened positive tomorrow, you can buy it, but you'd have to be more conscious that it's going to come back and try to do a so the first signs of selling, you come out of it and see if it's going to pull back, and then you can hope to see if it's going to do a buy signal the second time around. HTLD, this one I'd be more apt to buy once it got back. See, it didn't even get up above the T-line. If you're short on this one, you stay short until you see a buy signal and a close above the T-line. Bidu, ruh-roh. Bidu, right now I wouldn't be long or short on this one, but I would buy this. It's stayed above the T-line. It's doing what we call the bobble. It came up, hit the 50, pulled right back to the T-line. If it comes back up through the 50, you want to be buying. That tells you that that's not going to act as resistance anymore. Go. You stay long on this one. Now you've done a left-right combo. Makes this one pretty simple. If it opens lower tomorrow, you probably want to take profits because it's going to come back down and test the T-line. Then you can always buy back if it bounces off of there. AMSG opened right on the T-line, traded down a little bit, but closed back up above the T-line. If this opens positive tomorrow, you want to be a buyer because that's pretty much telling you they're going to be doing a J-hook pattern. And then if you buy in positive trading tomorrow, you just use a close below the T-line as your stop. The Qs needs to see a positive open. It's going to move in the direction of how they open this one tomorrow. Williams Brothers. This one couldn't get back up above the T-line yet. I wouldn't be long on this one. I probably wouldn't be short, but I wouldn't be long until you see a close above the T-line. TJ Maxx. I wouldn't be long or short this one at all. There's no direction to it. I'd be someplace else. MMS. This one's got the slow curve. At the worst case scenario, you just stay long on this one. I wouldn't be buying it here, but I wouldn't, if I owned it, I'd stay long. Cassie, Doji gap up. Another one that if this opens positive tomorrow, it's basically confirming this signal right here, your Doji gap up, and it's breaking this downtrending channel. More than likely, what it's going to do will come right back up very quickly to the trend channel and then start a 45-degree off of there. Philip Morris bounced off the, or doing a bullish Harami right here on the 50, which means if it opens positive, at least they're probably going to bounce it back up to the T-line. I wouldn't trade this one just because of the lack of magnitude of movement in it, It's more of an institutional trader. If it opens lower and starts coming back down through today's low, which is also the 50, you want to go short because now that makes your next target, first of all, a potential doji sandwich to the downside, which would take you down quite a bit. Then your next target would be the 200-day moving average. PTCT, little wedge, but you stay with this as long as it stays above the T line. Coca-Cola. Coca-Cola, I wouldn't be long or short. As you can see, it's probably in a wedge formation. And even when it does move, it doesn't move with any great magnitude. I'd have my money someplace else. The Russell 2000, same as the NASDAQ. It's probably going to move in the direction of how they open this one tomorrow. And Facebook. Facebook just has a hard time. It's still just barely in the trend channel, but it's got a very slow trend at best. And your stochastics are heading down pretty hard. If this one opens lower tomorrow, if you're long, you definitely want to be out of it if you didn't get out of it today. The only way you can stay long is if it opens positive and closes above the T-line tomorrow. Mac was doing some profit taking over the last couple of days. More than likely, it's going to come back down and test the T-line. But with it being this close to the T-line, I'd probably stay with it until it does close below the T-line. Pixelworks, nothing to get real excited about one way or the other. You are in a slow curve to the upside. If you're long, you can stay long on this as long as it stays above the T-line. UVE, another one where all you can do right now is stay long with it staying above the T-line. Nubo, stay long. Notice the J-hook pattern started with a big bullish engulfing signal. Now you've got kind of a doji sandwich breakout. You stay long on this one. Look for it to do a 45-degree, probably same trajectory as what it was before the pullback. And MetLife, another one that could possibly be doing a bobble. Again, hitting the 50 or hitting the 200, could be pulling back to the T-line. Again, it's an institutional trader, but it's in an uptrend. If I was going to be a buyer at this point, I'd wait for it to break out through the 200. ITG, just stay long as long as it stays above the T-line. GM is flat, but you do have a potential flutter kicker here. If this opens positive tomorrow, you can be buying because it's going to move in the direction of how they open it after the doji, which means if they have a big day tomorrow, number one, it's breaking out through this level. Number two, it'd be doing a flutter kicker, which meant if it had a big day tomorrow, if you took out the flutter, you're going to have a strong uptrend after that. ACAD, just stay long. Came out of this rounding bottom. Just stay long as it can't close below the T-line. GSAT. GSAT, J-hook pattern, I would suspect this move and this move about the same. I'd look for the 200-day moving average to see when the profit taking starts. Best Buy, you can stay long on this one. Best Buy, again, is an institutional type trader, not big percentage moves. But right now, I would stay long, especially if they broke it out through this level, which will hopefully be tomorrow on a positive open. CYBR was in a wedge formation, and it's right at the very bottom of it. It has to open positive and trade positive tomorrow. If it opens lower, breaking this downward trend, we're closing out all positions. FCX, stay short until you see a buy signal. You can see what the current trend is, down, hit the resistance level around the 50. If it opens weaker tomorrow, you still want to stay short or go short. ARWR should have been probably closed out today, and it's in a very slow uptrend. The potential of a breakout is gone. If you own it, it has to open positive and trade positive to stay in it. And JRJC, stay with this. Notice the bigger the move, the more compelling your 45 degrees is going to be in progress. You stay long on this one. EWJ, this one you probably want to be out of now that it's closed back below the T-line. You can see how the trajectory disappeared. This is the Japan ETF. If this opens lower, you can be going short because you'd have a bearish doji sandwich probably bringing you back down into this range, trying to fill that gap. And O. Right now, as you can see, the downtrend's in progress. You did have that kicker signal, but you do have a bullish harami, but it wouldn't be anything that I'd want to go long at this point. If I was short on this one, I'd stay short, using the T-line as your stop. You've got a slow curve on Costco. You can be buying this one on positive trading tomorrow. Again, be aware that it's an institutional trader, doesn't have huge payouts or returns. Paycheck. You should be out of this one, but you do have a long-legged doji bullish confirmation. If it does open positive tomorrow, you can be buying it, or seeing that you're setting up for a J-hook pattern, you can buy it on positive trading and see what it does up here, or you can wait for it to break out through here knowing that this wave and this wave will be the same. But the probabilities will be much greater when it breaks out through the top of that range. TNET, I don't know what to tell you here. That's an ugly chart. I wouldn't be long or short right now on that one. And JetBlue. JetBlue, you should have been out of it today after it closed below the T-line. You can see it's getting soggy. But tomorrow will tell you a story. If they open up positive, you can buy it back if it closes back up above the T-line. If it opens lower, they're probably bringing it back down to the 50. Tiffany's. Yes, you can be short this one. That's a good short. You had a doji sandwich. You had a bearish harami. Get rid of that. And you've got wave 1, wave 2, potentially going into wave 3. BABA has not been able to get out of its own way here for a while. You just stay short. You can see you're still in a downtrend. And the SPY did the bullish harami. It'll move in the direction. If they open this positive tomorrow, at least they're going to bounce back up to the T-line and test that one. Bank of America. Bank of America wouldn't be long or short. It's having a hard time moving one way or the other. And Ford needed to get back up. I'd be ready to buy this one. You can see it's trying to support on the 200. You can be buying this one again up above the T-line, which would give you the J-hook pattern in progress. Slumberger, stay short. As long as, especially on this little doji type day, spinning top, if it opens weaker, that slow curve. Notice the little kicker signal the other day. And Jern, after the profit taking, you can see the profit taking's over with a bullish harami. If it opens positive tomorrow, you can be buying immediately, and then all you do is use the halfway point of this candle that told us the selling had stopped as your stop. U.S. Steel. Right now you want to stay short. You can see that you've got a wave 1, wave 2, going into wave 3. Stay short on this one. And Cena, let's make this bigger. Still not anything. I wouldn't be long or short this one. Nothing there to give you any good feel for which way they're moving it. And GDX, you stay short on this one. Ever since the left-right combo bullish and bearish engulfing. Another one where you got wave 1, failure. In wave 3, stay short. More than likely, they're going to come back and test the lows. AMPH. Just stay long on this one. Oh, we're way down here to Schlumberger. SHWC. SWHC as in Smith & Wesson. As you can see, the pullback's really indecisive. I would stay long as it stays above the T-line. ASGM, bounce, we did that one earlier. That one bouncing up off the T-line, you stay with it. QCOM, a J-hook pattern, bullish engulfing, taking you back up again. First target is the 200, and then you see if there's enough strength to get it through there. VIP, you stay long as long as it doesn't close below the T-line, which pretty much means this one has to open positive and trade positive tomorrow to stay in it. TGTX, another one that's coming out of this fry pan bottom type pattern. You stay long as this doesn't close below the T-line. MDVN. See the slow curve, fry pan bottom. All you can do on these is just stay long. XIV. This one needs to get back up above the T-line. If this opens lower tomorrow, you can short it with the anticipation it's going to come back and test the 50. Let's see, I'm losing my place here. Can you still go short? I wouldn't. On Lulu, you've already had a move from 70 to 30. This is not the place to be shorting it. There's better risk-reward situations out there right now. Intel, not one that I'd trade because of the lack of movement, but it is looking like it's in a bearish J-hook pattern or bearish wave 3. This one you can short on weakness tomorrow because that tells you this level right here is not acting as support anymore. YY, it needs to stay above the T-line to stay in it. It's really not a really good looking chart because there wasn't any real bullish signal there. Jitbidu, Home Depot. Another one where it's an institutional trader. I wouldn't trade it at all. But if you're long, you just stay long as long as it stays above the T-line. Depot, another one. As long as it stays above the T-line, notice what it did. After the bearish engulfing signal, it did come back down to test the T-line and then pop right back up again. Let's see. We did BABA, CVS. This one you should be out of. This one's an institutional trader, not a whole lot of magnitude of movement. But I wouldn't be long or short this one right now. Just not enough movement in it, and you shouldn't be long. Ness this is what the difference is between a reversal and a pullback. You can see this pullback relatively indecisive, and they are not letting it close below the 50. If it does close below the 50, I'd close it out because that would show you that now you're in a very slow sideways movement. If it opens up above, it means they're probably going to pop it back up to the top of the channel here. And Holly, this one, if you were short, probably today was a good day to cover it because if you've got the doji gap down, hard sell off. Now you can see they're bottoming it, bringing it back up to the T-line. So if I was short, I would probably have covered it today, but I'd be ready to short it if it came back down through this area, meaning if it failed the T-line and started back down, you could re-short. Did I do FCX? Yeah, stay short on this one. What is that? Hilton. Hilton you should be out of. With a shooting star gap down, you don't want to be long. And if it came back down through today's low, I'd probably be more apt to go short. Disney. Disney, if you were out of it yesterday, again, this wouldn't be one that you really want to trade at this point because you're going to be in a 45 degree ever since the big move up. But the magnitude of move may not be that significant. But if you're holding this for long term, I'd be more apt to use the 50. As long as it stays above the 50, you want to stay long. Electronic Arts, this one I'd be out of and wait for the next buy signal. If I like this one, notice the 45 degree that ended the other day, I'd just put a buy stop up here at around 50, say 58.50. If it comes up through there, it's starting its next move to the upside. And Under Armour, same scenario, it should be out, but you can be buying this one on a positive trading tomorrow and just use the T-line as your stop after today's close back up above the T-line. And VRX, 45 degree, you just stay long on this as long as it stays above the T-line. HSKA, Heskey. You can stay long on this one. You're up to the overbought area and kind of did a shooting star doji. It needs to open positive. I would suspect it's going to be more than a 45 degree, same trajectory as this. But I'd probably put a sell stop below today's low. If it came back down through there, that means they're probably going to bring it back down to the T-line. BCLI, I'd stay long on this one. This has got the good cup and handle setup for a small price stock, and it's still good. 8, I'd be ready to go short on this one because it's failed this at last support level with a little doji gap down. I'd suspect your wave 1, wave 2, wave 3 to the downside. UNH, just slow, steady uptrend. I wouldn't be trading this one, but if you're holding this long term, continue to hold. ASM. No, LC. I'll try this once more. ASM. Whoops. ASM. Nope. Bida had the fry pan bottom, but it blew it today. It needed to open positive and trade positive, but as you can see, they smashed it. I wouldn't be long or short this one because there's no pattern to it. Cisco. Cisco, nothing that I'd be wanting to do with this one. It got back up to the top of the trend channel, but now there's really nothing. In short term, I wouldn't be doing anything with this one. QIHU, another one that needs to see strength to get back up. If I was shorting this one, I'd put a sell stop right down here, because if it comes back down through there, you've got wave 1, wave 2, J-hook pattern, wave 3 to the downside. It's up 5% after earnings, all right. Then that means if it's up pretty strong, doing kind of signal watch at see what it does at the 50. ANTH. Here's a example what to use where you use a stop. If you're up in the overbought condition, this was strong bullish. You just put your stop at the previous day's close. It shouldn't come back down through that level. So you should have been stopped out. You definitely would have been out with it closing back below the T-line. And that's more, I'm going to say, should be more, not more quick. Once they stock gets up in the overbought condition, to have your stop set someplace that tells you it shouldn't be coming back through that level. Keurig, failing at the 200, back below the 50 and the T-line. Get ready to short this one because this one, if they start selling off, should be coming back down to test the lows. And Asian stocks are up. CYTL. JHX. There's your J-hook pattern. You can be buying this one on positive trading, or you can be buying once it starts trading up above that level, that's telling you you've broken out into wave 3. And a couple more and we're done. RSX. This one you should be out of and possibly even going short with the anticipation it's coming back to the T-line. McDonald's. I wouldn't be long or short this one just because of the lack of movement. It's an institutional trader. And thank you. Wonderful evening. All right. What if not a member, but on a 4-week complimentary? Are we able to see the recordings? Yes. As a 4-week member, you've got full, just like you're a member. You can see everything that you want to on the on videos and these sessions. How do we when a stock is how do we know when a stock is an institutional trader? You know, usually the big ones like McDonald's, like Coca-Cola, the things that the institutions are buying, not traders. Ones usually trade big money, and they're usually slow movers. You're buying Coca-Cola so that you can make a 12% return over the next 12 months. AMGN, this one you get ready for a bearish doji sandwich. If it opens lower, they're going to take it down to the 200, which would coincide with hitting the bottom of this trend channel. ADHD had been out of the picture for a while, and it's still out of the picture. I wouldn't be long or short this one right now. We'd also, at the same time, bought ADXS, and that one's been moving nicely because it's never come back below the T-line. Delta on a blue ice failure. Was today a reversal? No, today was not a reversal. It was just an update in a downtrend. So if I was short this one, I'd stay short. I just wouldn't want to see it close above the T-line. Why not do institutionals? You can if you're holding more for a longer term or if you're trading options. But to try to trade an institutional trader, you're not going to make a very big percent return or a very big percent move. UFS. Yeah, that one, that's toughy. I wouldn't be long or short this stock. If I was going to buy this one, it would have to come back up through today's open to be breaking out into wave 3. We did MWW, or did we? Eyes did a left-right combo. It has to open positive, and notice where it's traded, just above the 3T line. If this opened lower tomorrow, I would take profits because it's going to come back down at least to test the T line. And MWW just stay long, but it has to open. Notice the pullback, very indecisive. So we're expecting it to continue higher, but we need to see it open higher and trade higher to stay in it. CSIQ, after the weakness yesterday or Friday, with it opening lower, we kind of suspected it would come back down and test the T-line, which it did. Now it has to start trading positive from here, or at least stay above the T-line. COT did the same thing, came back down and tested the T-line, but this one can be bought on positive trading tomorrow because this would make wave 1, wave 2, J-hook pattern in progress starting wave 3. And RMD. RMD slow curve, trend kicker, which means there's going to be more upside. If there's a positive open, it's breaking out through this level, you can be buying this one. That's a good looking chart. And BIB, Ultra Biotech, haven't been able to close below the T line. Was that BIB or BBBI? Whoops. BIIB, which is just staying long. Geos, we recommend it as a short, and you probably want to stay short. You want to probably be shorting this on any weakness tomorrow. Kroger, with the gap up, is probably coming right back up into this trend trajectory. What do lots of long whiskers on the top? A lot of shadows means they're having a hard time moving it up. Get ready for it to reverse to the downside. Earnings shortly, all right, on eyes. We did Kroger, IBB. Just stay long as this stays above the T line. And AAVL just kind of lost its oomph. I wouldn't be long or short. It's moving sideways. What sequence of things do you like to see on lower lights to higher lights for entry and exit? For day trading on 1, 5, 10 minute or for swing trading on day. What do you see on lower lights to higher lights? I don't understand the question. I'm still trading off the candles. Oh. Lower lows and higher lows. Yeah, the patterns on a chart like this, or on any chart, this is what your daily chart looks like. This is what your 10-minute chart looks like. This is what your 5-minute chart looks like. I mean, they all look exactly the same. All depends on the time frame that you're trading. Some swing traders might use a 5-minute, 15-minute hourly chart if they're trading slower. I used to trade the E-minis off the 1-minute, 3-minute, 10-minute chart. But they're all going to look the same because candlesticks are the cumulative knowledge of everybody buying and selling during that time frame. And it doesn't matter what time frame. It's still the depiction of investor sentiment. Lower minutes to higher minutes. I don't know what lower minutes to higher minutes mean. Is it safer to be trading institutional stocks because you won't get as much withdrawal with volatility? That's all up to each individual. Now, if you're somebody that might not be able to sit at the computer all day and watch the screen, that you've got other things going on, yeah, you might pick the slower stocks that you know once they move in a trend, they're going to move for a while. But your rate of return probably won't be as great. If you're sitting watching, if you see a candlestick buy signal in a stock that has the potential of going up 40% versus a stock that has the potential of going up 4%, more than likely you're going to have more volatility than the one that has the potential of going up 40%. But if you're sitting here watching it, you're probably going to be able to trade the more volatile stocks. Whereas if you're sitting where you are at home or at work where you can't watch everything all day long, yeah, you pick out stocks that might move slower. All right, just we did YY. We'll do price line. Price line, you should have been out with a little kicker type signal. You can always buy it back if it closes back up above the T line. Con, no, you don't want to be long on this one. As a matter of fact, you might have a berry scoop pattern going on. Kite, wouldn't be long or short this one right now. I'd rather buy this at 69.50 knowing that it broke out to the upside. And the last one will be Zyop. I think we did that one earlier. Stay long as this doesn't close below the T line. Okay, we're way past everybody's bedtime. Sorry that took so long tonight. We'll see everybody tomorrow in the chat rooms. Have a good evening.